Hi and welcome to the Market Alert for Monday the 29th of August 2022. Now on Friday I said I wasn't going to do a Market Alert, but because of the rapid change in events during Friday afternoon after Powell spoke at the Jackson Hole Symposium, I thought I'd bring you up to speed for those that are not going anywhere and maybe wish to trade the markets, even the electronic FTSE. That's how that one will trade today. But of course the German market and the US market will be open today, and they've already been down on the overnight. So let's have a quick roundup of events on this bank holiday Monday. So stocks drop as rate hike odds pop after Powell's brief message. The odds of a 75 basis point hike in September are back above 60%. He's standing firm on his policy of trying to combat inflation. He's going to raise rates again. So stocks turn negative on the month after Powell gives little to doves. And pain is coming. A pro-Powell pivot positioning pummeled as hawks hammer markets. Don't fight the Fed, and that's why they relinquished the bear rally of late, or for the last month of July, and now moving back to the downside. Powell warns of economic pain from tightening, says historical record cautions against loosening policy prematurely. Will he or won't he? Well, I think we'll have to wait until January before he starts to pivot after he's destroyed the whole of the US economy before we see anything change there. And in the UK, of course, on Friday we had the energy bills soar by 80%. And the impact on the FTSE was negligible until Powell spoke about continuing to tighten. Then, of course, they had to relent to all of the other stock markets moving lower. But this was the main news on Friday. It doesn't bode well for the UK. Inflation heading towards 18%. They're talking of increasing interest rates to 7%. Good luck with that one. We'll just have to wait and see if, January, that we could see another 80% increase. But I think the reality is starting to kick in now. I've spoken about this for a long time, and the destruction of the economy to get this net zero thing in place, and it's going to have a massive impact on the markets and the economy. And I think the reality now is just starting to hit home that bills will be doubling in price from October. We're nearly into September. Yeah, from October, our direct debits will be doubling. It's just unthinkable, really. But there you go. We've got the gold-silver ratio moving back to the upside overnight because the silver market is getting crushed. As I said it would, if the stock markets go lower, they will take silver with them. And it is. Gold's holding quite well. You can see there, we're back up to 92 pieces of silver for 1 ounce of gold. News today, well, it's bank holiday in the UK, as you're already aware. We've got FOMC member Brainard speaking at 7:15. The markets tend to make their way back to the upside when you get a down day like Friday, and then if the UK is closed, there's always room to try and bring the markets back. It doesn't tend to always follow through. So with that, let's have a look at the markets for Friday and the overnight. So in the Dow, you can see there the market trading down to 78% retracement. I've drawn this in from here to here, and you can see there a bit of support there. The market coming off the lows overnight as well. Have a look at this in the 30-minute chart. So you can see that we gapped lower. We're trying to fill the gap, and we need to get back above Friday's close and low. The market closing at the low on Friday. So a bit of a move to the upside there at the moment, showing a bit of support, but the 30-minute becoming overbought there. Just going back to the daily, we've not really had much of a move to the downside or a corrective wave yet in the Dow, but watch the 89% retracement level there and these two lows that we saw where the market started its ascent during July with the bear rally that we saw then. In the German DAX, also back at the 78%, but this 78% is slightly different. This is off the low that we made in July, whereas in the Dow, I'll just go back to the Dow for you, you can see that this 78% is not off the low. So the Dow very strong compared to the DAX, but then the DAX is closer to the war action in the Ukraine. So there we can see, and also affected by the gas situation as well. So back 78% from the main swing in this market, and you can see it also coming off the lows as well on the overnight. We look at the 30-minute, You can see they're trading down to the S1 and then starting to bounce off this. Probably have a rally up to the low first. See how the market reacts there. We've got the 20 bar moving average in the way as well. We're already overbought momentum wise in the DAX. So again, when the cash market comes on stream, who knows if they start to sell aggressively there and move the market back down to retest the S1. In the 5-minute chart, it was all fairly quiet, to be honest with you. Friday, I was getting on with other things. We had a bit of a move to begin with, and then it all went quiet. So I remained on the DIY tasks that I just want to get completed for winter. The market then pulled back a bit and then slammed. And fortunately, I happened to be around at the time, seeing the 3 o'clock news, wasn't it, when Powell was going to speak. Hit the markets hard, and for the week, you can see there we were up 1,447. Profit factor for the week 7.8. Profitable trades of 71 to 29, and the longer term. You can see that we're starting to break out again in the equity curve towards that 35,000. So since the 19th of January, we're up 25,444. On this, we have a profit factor of 2.25, and we're still at only 55-45 win to loss ratio there. So, but the equity curve is very nice there, nice and steady. So let's go back to the DAX overnight. Let's have a look inside. That we can see that we've got the market putting in a gap there. We've got a double bottom down here. The market's been moving up, a bit of a pullback there, waiting for the futures to open in Germany at 7 a.m. That's a good hour away from where I'm recording at the moment. And the target is going to be moving this market back up to the low. When it gets to the low, that's where we're going to find it to be a bit sticky. But the UK is closed today. In the S&P, also trading down to the 78% retracement, finding support again, not at the main low of July, but a third of the way up in the month of July, where we had the bear market rally there. So a bit of support there. 30-minute chart also showing this. No great volume. It's just being moved up by the algorithms at the moment, as you can see there. So still sideways. In the UK, we actually see a bit of movement to the downside, but then still not a great deal. Finding support there as well. Needs to get back above the 50 bar and the 200 MA if it's to move higher. These are the downside targets should it fail. Went through that 78.89 again on Friday, which we can remove, and remove this as well. So they're the downside targets for the UK. On a more micro level, we've got from here down to here to try and move back to the upside. But again, we've got to take out Friday's low. We've traded up to it, which is more than the DAX has done. And the market so far has failed. It's become overbought. So watch the S1 on the downside. Looking for here is a bit of a pullback, 89%, and then attempt to move to the upside. But keeping in mind that we have got this weakness around now in the daily. And also what you want to be careful of is this low that's been made on the overnight as well. And that's the same for all of these stock markets. In the currencies, let's go to the daily of the yen. Stuck in a sideways move. The dollar screaming to the upside on Friday and on the overnight, which has put downside pressure on the metals and also other currencies. You can see the yen there still stuck in this sideways range. There's the reaction to the Jackson Hole announcement by Powell. We'd already moved up beforehand, but then as soon as he mentioned anything about raising rates and continuing to do this, the market has moved sharply to the upside with the prices sitting above the DP. In the pound, this was crushed and is being crushed on the overnight as well through that $1.17 on the daily chart. So let's just move out to the monthly chart so that we can see where we are. It's the 114, isn't it, is where we've had the crosshairs focusing for some time, and that's likely to be retested there. But in the 30 minutes, again, like the yen moving higher, and then when Powell announced his intentions to continue to raise rates, the market trading down sharply there, way through Thursday's low. Not a green bar in sight still for the British pound. In the metals, silver down to the 89 percentile, just trading below that already on the overnight. Watch the 1805, 1 o'clock fix by the LBMA is likely to send this market below the low that we saw of 1805 a few weeks ago. We've had a bit of a reprieve, and then continue on down, as I've said before, in the daily, the weekly and the monthly chart. Let me just grab the weekly chart. Let me just tidy this up a bit and add on some other bits and pieces, but you'll see that recent low there. Let's have a look at the monthly. It's going to give us a clearer picture here. Let's just spread this out and add on a couple of lines. We've got this support here, so down to 1437, 1634. That will be dirt cheap, beyond cheap. To be honest with you, they might as well give it away at that price. It's already 80% lower than it was in 1979. So if it gets down to the 89% retracement, where we started off with the pandemic low here, when I bought in at $13 all the way up to 30, you can see that this market's pulled back significantly, but nothing like 1979, 2011, where the market was $50 an ounce and it's now only 19, heading down to 18. I mean, it's just insane how cheap the price of silver is, but it is what it is. And we've seen the manipulation again by the banks, JP Morgan, and the traders being sent to prison or awaiting sentence. Anyway, we know that's going on, so we can see that also it's silver is priced against the US dollar, and you'll see in a minute how much that's moved. So no surprise that silver's been hammered there from a non-conspiratorial point of view as well. So 89 is already through there, and like I say, let's just redraw this and we'll go to this low, to this high. You'll probably find there's the new 89 there. So 1836 is today's target. It's probably going to go straight through that and down to $18 an ounce. Gold lower as well, but not being as hammered as much as the price of silver. And you can see this here if we go back to silver, go back to July's low. You can see how much closer the price is to its low compared to gold, where you've got the low here. It's nowhere near, and that's why you've got the 93 silver pieces to 1 ounce of gold. In the 30-minute gold, the market reacting here, rates have got to go up. That's good for the dollar. It's bad news for gold, and gold hammered to the downside there. US dollar rallying all the way off its lows, and overnight has spiked above that 109. 120 is the high of the US dollar, which I'll add in tomorrow. And then finally, crude oil moving to the upside, adding to the inflation story now and woes, and certainly the energy issue that we're all starting to see now and be aware of. And if you're not aware of it by now, then God help you at the end of October when you get your first gas bill. Okay, that's it for this one. Like I say, I wasn't going to record it, but there was a lot going on, so I thought I'd just bring you up to speed, and we'll see what happens at 7 a.m. when the market's open. Okay, that's it for this one, and as ever, thanks for watching. See you in the next one.